Hey, welcome everybody. We are here with Benzinga All Access. I'm Michael Murray with Benzinga. It's June 10th, and we are bringing in some public companies to have conversations with their CEOs and get as authentic and real a look at what these companies are doing as you're going to get anywhere else. We're going to have live conversations. We're going to talk about product. We're going to talk about developments. We're going to talk about everything interesting happening in these company spaces. A couple of things to run through before we get started and bring on our first guest. All Access has a sponsor, Ticker, which is obviously in the intro video. We have a piece of collateral we want to play for him. Aaron Thomas, let's run it.
What is Ticker? That's right, a ticker with two eyes, just like you. Because it's for you, for investing, for stock perks, for connecting you to public companies who reward you as a shareholder, as a brand lover. That's why people can't stop tickering. Ticker, where investors discover shareholder perks and consumers become investors in the brands they love. Ticker. Start tickering today.
Awesome. Thank you, Aaron. We are going to get ready to go in a couple of minutes here. Just a quick disclaimer before we get going. All Access is one of the ways we do monetize our YouTube channel. These CEOs do not know what we're going to ask them before they come on the show. Like I said, it's as authentic a look into these companies and what they're doing as you're going to get anywhere else as we have live conversations with these CEOs. So I know we have our first guest backstage. We're going to go ahead and bring him on if we're ready and go ahead and get started with All Access here. Welcome, Daniel. How you doing?
Very well. Thank you so much, Michael. Thank you so much for having us. I appreciate the time.
It's a pleasure to have you and Siyata here with us. Daniel, you are the VP of Corporate Development here at Siyata. We have a bunch of interesting stuff to get to as we get started. But for those of us in our audience who don't know what Siyata Mobile is, can you give us a general overview of the company and what you guys do?
Absolutely. So we develop communication devices. They look like smartphones, they act like smartphones, but they're designed specifically for first responders. So they operate over something called push to talk over cellular. In fact, some of you may remember this from many years ago. Nextel had that network where you can use your phone like a walkie-talkie. So this is really the next iteration of that technology. And what we are targeting is the land mobile radio industry. So if you look at first responders or any uh, customer or fleet customer, for instance, they would use those shoulder-mounted radios on their shoulder, and that is largely speaking a radio technology dominated by Motorola solutions. This is a technology that's been around for decades, and it works very well for one-to-one and one-to-many communications. What we are providing is a disruptive solution that operates over the 4G network. It really leverages the cellular carriers networks globally, in fact, and we've been approved now with most of the major carriers in North America and many internationally. So what we sell the hardware that enables this technology to work. Land mobile radio is a very large industry, over $12 billion. Push to talk over cellular is that next iteration of that technology, and it's growing quite quickly. We're one of only a handful of companies that provides these solutions, and we believe we are very uniquely positioned to provide some very disruptive solutions in all three of our product categories.
Fantastic. Okay, Daniel, I want to talk a little bit about your genesis with Siyata here too. Can you talk about how you became involved with the company, your background there, and what made it so exciting to you when you got started?
No, absolutely. Good question. So, in my previous life, I was 25 years in investment banking, specifically as a technology analyst. So, I've known the company when they first became public on the Toronto Stock Exchange. In fact, I was the first analyst to launch coverage on them. So, I met the CEO and the rest of the management team many years ago, and I've watched their progression for many years and grew to really respect what they had done. They innovated in the industry, developed technology into a niche area at the time that no one else was developing. And then they started to come into the North American market in 2019. My involvement with them started around more on a full time basis, coming on 3 years now, when the company uplisted onto the NASDAQ. And there was an opportunity for me to work more closely with the company. So I left my investment banking job, have an opportunity now to both work with investors and analysts and bankers, work on our M&A strategy, and much more involved strategically and organically within the management team. So it's been tremendous and opportunity for me to both learn and see how the company grows, and also to leverage my network. I've been able to go back to my same clients, both in Canada and the U.S., and deal with the same people that I've dealt with for 25 years and tell them the story from this chair.
That's awesome. I love the backstory there. And I want to talk a little bit about what you mentioned actually as you came on, the next generation push to talk over cellular SD7 device. What makes this so exciting? It's going to be on Verizon's global network. What exactly is it? How does it function? And what are the details and what makes this so significant?
Yeah, so this is our newest product that we just launched into North America. So we're really quite excited about this product. So if you look at the form factor, in fact, if you go to slide 7, if you don't mind, in fact, slide 7 would be a good one with regards to what this device is. So it looks like a walkie-talkie. It acts like a walkie-talkie. Michael, if you wouldn't mind just going to the next slide. And as you can see, the form factor, it just has a simple button on the side highlighted in red there. You push that button and you can talk to one-to-one or one-to-many calls, and all those calls can be created remotely. On the top, you'll see just a small 1-inch screen, and that's really for selecting channels, connecting to your Wi-Fi or whatever, what have you. So it looks like a walkie-talkie, acts like a walkie-talkie, but it has the guts of a 4G smartphone. So why this is so unique? Number one, there's nothing else like this in the North American market that we're aware of. Number two, it's coming in at a price point that's significantly below a land mobile radio. So we're offering this to the carriers for $300. Compare that to land mobile radios, which can get as expensive as $13,000. You can see the price delta. Number three, because land mobile radio has very limited coverage, just like your AM/FM radio, once you drive outside of a zone, you lose coverage, and oftentimes even police from different counties would have problems communicating with one another because they are on different land mobile radio networks. So this is obviously a global standard. Any carrier that offers 4G coverage, which is virtually every major carrier in North America, you can have coverage. In fact, the coverage goes beyond North America, but you can talk to anyone globally as long as they're on a 4G LTE network. So that's number two. Number three, it provides incredible sound quality. This is a purpose-built device. So even though it looks like a smartphone, unlike our smartphones, which you can use in our cars well enough with a Bluetooth headset, for example, but inside a commercial vehicle or inside situations where it's much more noisy, you need active noise cancellation. We have multiple microphones for that. We have an excellent loud sound quality for speaking, so you can always hear the other parties on the other side. So these are absolutely critical for first responders. And it's ease of use. So this is a device where it's designed specifically for its intended purpose. Unlike a smartphone, whereby users can obviously use it for things that are not intended for their work, this is specifically only a push-to-talk device, so you can't really do anything else on it. So it's a pure communication device. It's inexpensive. It works globally. It's rugged, and it will really help the carriers achieve their goals to ramp up in terms of their subscriber growth as they continue to pick away at the land mobile radio market.
Perfect. Okay, you talked about this just a little bit, but we've got a couple of questions from our audience too about the security of the communications. Can you talk a little bit about how secure these comms are? How do you guys make sure that they stay secure? What's the process there?
Yeah, so that's a great question. So that's all done in the software protocols, both on the phone, but more importantly, what we operate over primarily is something called FirstNet. FirstNet was established back in 2012. AT&T won that contract in 2017, and they're managing that network. So FirstNet, the government allocated what's called band 14, 700 megahertz on the 4G LTE network. So AT&T manages that network. It's in fact a separate core from their core network. So it has its own network operating system. It has its own protocols, its own security. In fact, it's more secure than their traditional network for a good reason, because it's designed specifically for critical communications for the first responder market. So it has all the protocols and security built into it, and it's I would argue it's even more secure than your smartphone that we carry today.
Outstanding. Okay, good to know. One of the bigger topics we want to discuss, the recent Q1 earnings reports you guys put out a few weeks ago. The Q1 revenue was reported to be negatively impacted due to the transition from your legacy product sales over to new product lines. How's that adjustment been going? How are you guys maybe solving for that moving forward? And has there been any impact to the business as a whole?
Yeah, so as we reported, first quarter was weaker than we had hoped. The launch of this new particular product, the SD7, has been a big shift in focus for our key salesmen in the US, as all the carriers that we are talking to are quite excited about it. In fact, we came back from the IWCE, a big trade show, just not too long ago, and we haven't received so much interest in any one of our products in our corporate history. So this has been a real change for us in terms of how we're approaching the market. As a result, we've been deploying these units in beta tests across most of our major customers and potentially some new. So you saw recently that we've been approved with FirstNet, AT&T. Just recently, we also announced Verizon. So we're seeing some really good momentum now in terms of carrier uptake in this process. You'll see the Vault. We're expected to start to ship this product beginning in Q2 in volume and then ramp thereafter. So the real focus for us in terms of where we think we'll see significant growth for our company will be delivered by this one product category. Just to keep in mind, this is one product for us. There are a family of rugged handsets that we have that we don't sell in North America, but this is the first we're selling in North America. And we do have two other product categories. We have an in-vehicle device as well. As things started to alleviate from the pandemic and the trials resumed, we're seeing a good growth in our pipe of business in that category. And our last product category I would mention is our cellular boosters. So we're seeing a real resurgence in demand for that as well. The pipe of business, again, is growing quite significantly, largely with enterprises and corporate customers. And enterprises are recognizing the benefit of providing constant cellular connectivity as a complement to Wi-Fi in many situations, or even solely. You can use this in your house, in your car, in large warehouses. So there's a real benefit to providing that additional cellular coverage, and it's a great complement to our core products.
Fantastic. Okay, that's exactly what we wanted to know. And before we talk about the distribution partnerships and the suppliers that are so important to you guys, you've spoken a little bit to the customers and the clients that you guys work with, but I want to dive into that a little bit deeper. Who are your main profiles or segments of customers that are using these products? And more specifically, how are you guys attracting new business too? Is it sales? Is it direct outreach? What's your method of growth there?
Yeah, that's a great question. So we're a very small company. We're only 28 people. And how we get to end market is by really leveraging our carrier partnerships, carrier relationships. So as I said before, we've been approved by most of the major carriers in North America: AT&T, Verizon, FirstNet, Rogers, Bell, recently Telstra in Australia, STC in the Middle East. And we really leverage their direct sales teams, of which they have hundreds per carrier, of course. And it is through them that we have a joint sale to our end customer. So, it would be very difficult as a small company for us to approach any corporate enterprise customer with our solutions. They've never heard of Siyata. They don't really know what push-to-talk over cellular is. But when we come to them with a carrier as a partner to deliver and show them our products, it really changes the conversation and it opens the door. So it is through the carriers we get to the end customers. We do a joint sale, but the purchase orders ultimately come through the carriers. So our biggest customers are our carrier partners, as all the purchase orders come through them.
Got it. Okay, now let's talk about those distribution partnerships a little bit. It's a big part of the business for you. Talk about some of the key relationships you guys have on the distribution side, and how have you scaled and grown those over time too?
Well, we have a multi-pronged strategy to get to end market. So we have a team of salesmen that manage directly our carrier relationships, and they would be located primarily in North America, as the US is our largest end market for this particular product category. So that's the real focus for us going forward. The other channels that we do have key distributors that get us into various online channels. About 1 or 2 quarters ago, we announced Amazon, and we've also announced that we're selling our products through various other booster categories, such as signalbooster.com, which is the largest booster online site in North America that we're aware of. So it is a multi-pronged strategy to both get to consumer online through retail, but primarily through the carrier channel. And this will be the big focus for us going forward as we continue to sell all of our 3 product categories. And this is in fact a very important point. Excuse me. There's no other company that we're aware of that has all 3 product categories that we have, despite us being a very small company. And these 3 product categories all are selling into the same carrier channel and largely to the same end customer. So lots of leverage between those 3 product categories.
Fantastic. Okay, and then to kind of follow up on that a little bit, another thing you mentioned in this Q1 earnings report was the cellular boosters having growth fueled from the pandemic. So I want to dive into that a little bit more. How do you feel that the pandemic impacted the growth and fueled some of the growth for some of these boosters? And do you see that continuing into the future, or as the pandemic continues to tail down and we get this under control, do you think that growth is going to taper off?
So we had a real benefit to our business when the pandemic hit and more people were working from home. Of course, having solid call quality was very important, but also for downloading videos. If you have low bandwidth, it's very difficult to work from home, obviously. So our online sales for boosters at the time hit new record highs. What we are seeing now going forward is the enterprise market. So imagine now any retailer or any corporate customer, Wi-Fi works well enough. It's a modality that we all understand. It's a little bit clunky because it's password protected, but the biggest problem with Wi-Fi is when you log into that network, you now are exposing your devices to hacking. So it's problematic from a security perspective. Cellular is much more secure, as we discussed earlier, and it scales much better. So now it's a much cleaner solution. So if you walk into a stadium, and in fact, stadiums are deploying this quite a bit, airports, warehouses, where it's really important for your end clients to have constant connectivity. If you're walking into a pharmacy, as an example, and you need to identify yourself and download scripts in the world of the pandemic where you need to provide all this kind of verification, critically important to always have constant connectivity with your cellular device. So we're seeing lots of opportunity now with large enterprises, and these are potentially large deployments. We already announced some in the past where we've had some big wins, multi-million-dollar wins. We're expecting, or at least we're hoping, as we continue to develop this channel and we have more and more conversations with larger enterprises, that this will continue to be a big growth driver for the company.
Absolutely. Okay, perfect. And I want to talk a little bit about product development too. Obviously, with the boosters and the other products you already have in line, how important is product development, and where are your efforts focused right now on which part of the product lines you guys already have?
And so, being a small company, we need to continue to be very innovative in how we approach the market. So the SD7 is our latest product offering that we launched, and this is a next generation device that was really born out of the what we've learned from our in-vehicle devices. We also launched an in-vehicle device that marries, it complements to it very well. In fact, if you go to slide 8, you can see. Next slide. What you can see there on the bottom left-hand corner is what we call the vehicle kit. So we can take our rugged smartphone and it slots right into that. So that vehicle kit would be professionally installed inside a commercial vehicle. It's hardwired to your battery. You can attach an external antenna, put a booster. It has a much stronger speaker. It has active cooling, and it provides the ability to now identify a vehicle, and you can use a remote microphone for the driver. And when the driver leaves, and if you have multiple drivers, you can simply slide that, take your phone out, and take it with you wherever you go. So that's another unique device that we're just launching as well. We announced that about a quarter ago as a companion device to the SD7. What you'll see going forward is next iterations of the SD7. We've had lots of customer feedback with regards to the features and functions that they would like to see. So you'll see us enter new verticals with those. You'll see some of that news forthcoming. As a small company, always need to innovate. On the booster side, we've had a really unique value proposition. We compete with only one other company that we're aware of that sells into the carrier channel. And the way they sell their products is they would have their boosters are designed specifically for each carrier frequency, whereas our boosters work with all the carriers. So when you're in an enterprise environment, it gives us a huge advantage because we only need one box for every 3 or 4 of their boxes. So from a deployment and cost perspective, we're significantly less expensive. And we also have some unique technology. We acquired a company 2 years ago that provides the ability for our boosters to have uninterrupted signal, even in the event of a power loss. Most of the time, if you have a circuit going towards a booster and then connected to your end device, if the booster loses power, then you would lose connectivity to your end device. We have something called a bypass technology, which is quite unique in the industry. So again, that's very critical for first responders. You never can afford to lose communication. So it's really, our products are always designed with first responders in mind, and we're providing form factors and features and functions that are quite unique to really meet their unique needs.
No, absolutely. And you mentioned it earlier too, but you guys have a very small team, very compact, 28 people. How important are the team members that make up Siyata to everything that you guys do? Is there, I'd imagine there's a sincere cohesiveness and a great sense of teamwork here, especially seeing as you guys are making such quick progress as a young company. But how important is the team and the team members you guys have that make up Siyata?
Absolutely critical for a company of our size. In fact, I would say if we look across the board, we have incredibly long tenure. Most of the team members have been here since the inception of the company. And prior to arriving at Siyata, many of them had decades of experience within the telecom industry. So pound for pound, I believe our company of our size has one of the strongest teams. Our CEO, as an example, he's based in Israel. He founded the company. He's still in Israel. In fact, our core R&D is all performed in Israel. And the genesis of the company really came from when Google acquired Motorola's enterprise solutions. And Google was only interested in getting into the smartphone business, so they wanted to buy the IP, which they, of course, did. And where they shut down was the in-vehicle communication devices. At the time, there were 2G solutions, and the carriers were looking for a 3G solution. So the largest carriers in Israel approached our CEO to develop the next generation solution, and that's how that was the genesis of the company. And it was through that he built the team, and today continues to provide all the innovation and R&D in Israel. We have our finance team in Montreal. I'm in Toronto, and then the rest of us are located virtually. Everyone is, we talk almost daily between our sales teams. I have calls with our U.S. sales teams, our Canadian sales teams. Talk to ICE multiple times a day, of course. So it's been a really seamless transition for us because we were already primarily virtual prior to the pandemic. So it's really been no change for us. So we continue to be a very small, fast-moving company innovating in a very large industry.
Fantastic. Daniel, this has been a ton of great information. As we start to wrap, this is obviously an audience of retail investors and individuals. This is a live look at what you guys are doing. As we look at the rest of 22, what else should be on retail investors' minds for Siyata? Are there any notable developments, anything that should be on the radar going forward?
Absolutely. What we've communicated to investors are a couple of things. Number one, we understand that as a small company, we are consuming cash and that we need to grow our top line to get to the cash flow break even. And we want to get there as quickly as possible. And being small, we have lots of leverage to do so. And so what we've provided to investors is that we hope to get there within the coming quarters. In terms of catalysts going forward, what you'll see is new carrier wins, new product launches, new customer deployments. And what we're hoping is, based on the conversations we're having today, that these will be meaningful in size. These are very large customers, and these are significantly larger opportunities than we've ever seen in our past. Historically, if you look at our purchase orders, it would be rare to see something over the $1 million range. What we're really hoping is, with this new handset in particular and this in-vehicle device, the VK7 that you see on the bottom left there, that we showed earlier, we're hoping that those could be big volume runners for us. And then as things are waning from the pandemic and trials have resumed and budgets have been rediverted towards technology solutions versus providing laptops for kids, et cetera, that things will continue to accelerate in terms of deployments. So what we're hoping is to deliver to investors is continuous growth on the top line, profitability in the coming quarters, and lots of catalysts with our product categories.
Outstanding. Daniel Kim, Vice President of Corporate Development at Siyata. It's been an absolute pleasure having you here. Thank you so much for joining us on AllAccess.
Well, thank you so much. I really appreciate your time. Thank you, Michael.
Thank you. It's Daniel Kim from Siyata Mobile. We're going to keep AllAccess rolling, moving into another interview with the CEO of Knightscope, Bill Lee. We're going to bring him on and get started. Bill, how you doing? Thanks for joining us.
I'm all right, Michael. Have you any idea what time it is out here? Like, I got chickens out here complaining.
We got you up early. I know you're on the West Coast. We're starting early, but we are really, really excited to have you guys here. It's always great to talk to you guys over on the Knightscope team. We've got a lot of stuff to cover. You guys have some really exciting stuff going on. Really quickly, before we get into these bigger announcements and the bigger developments, for anybody who doesn't know in our audience, which probably isn't going to be more than a handful of people by now, give us a quick overview of Knightscope and what the company's all about.
Sure. We build fully autonomous security robots, and our crazy mission is to see if we can make the United States of America the safest country in the world by giving the million officers and the million guards really smart eyes and ears and tools for them to do their jobs much, much more effectively. It's a unique combination of four really difficult technologies. Autonomous self-driving technology, like a self-driving car, robotics, AI, and electric vehicles, all molded into one. And we've been operating from Hawaii through Texas to Rhode Island. We've done actually more than 1.5 million hours out in the field, and got a lot of crime-fighting wins, so we're pretty excited.
Fantastic. All right, Bill, a lot of exciting stuff to cover here. Let's get into it. We recently had a very unique opportunity to go to an undisclosed location, do some on-the-ground content with Knightscope during your roadshow, where you guys were traveling around, meeting with different companies and organizations. What kind of an update can you give us on that roadshow? How is everything going? What kind of progress did you see there?
Roadshow, we're on a roll. I think we've done 45 pod landings, meaning we brought this, I call it a robot aquarium. We got a bunch of robots stuck in a big pod that's getting trucked around the country. I think we've hit 16 states plus Washington, D.C., and it's going much better than honestly I'd expected. When I brought this up to the team last year, hey, like we should do this crazy thing, and they're like, "You're out of your mind. This will never work." And we got it working. It's interesting. It's really good to do a virtual webinar. I mean, you can Zoom people to death and PowerPoint them to death and a bunch of videos and everything. But at the end of the day, most people, especially if it's something brand new that no one's ever seen in the history of mankind, like they want to come and touch, see, and feel. And that's always really good to do that on a virtual demo beforehand, and then have them come visit us in the pod with the decision makers. So it's nice to not nice to see you or nice to meet you the first time. It's nice to see you again. As we discussed, and it's been really helpful from a client development standpoint. And now it's even odder. Like we're getting requests for people to host the Robot Roadshow. I'm a little giddy. I think next Friday we're supposed to have it over at the Kennedy Space Center in Florida. So that's going to be a little bit surreal, but things are going rather well.
That's fantastic. I remember one of the things that myself and my team commented on and were really impressed by when we were on the ground at the roadshow was just the unmet needs that these robots are addressing. And I kind of want to dig into that a little bit more. We had a chance to talk about it when we did our interview on the ground. But when you're talking to these decision makers and the people that are coming to the roadshow, what kind of feedback are you getting from them about the needs that these robots are meeting that they're not getting met right now with current security systems?
Across the spectrum, I think it's not enough eyes, ears, and just resources to secure their facilities properly. We just deployed at a school. We've got a second school coming up. Just having additional capabilities for the officers and guards to do their jobs more effectively, as we often say. I think second is just the unemployment levels or inability to attract resources and talent to actually fill positions. I think those are primarily the two things, or three. They literally have way too much criminal activity. If you go to Knightscope.com, on our homepage now, you'll see a few testimonials. One of our clients is experiencing multiple vehicle thefts a day, and now they're down to de minimis amounts over a month. And so we've continued to see a lot of positive impact. So we know the technology is working.
Outstanding. Bill, glad to hear the roadshow is going well. There's a lot of exciting other stuff on the horizon for you guys, though, and things you're working on right now. Let's talk about a massive development you guys had recently. You just issued a press release about the in-process stage you've achieved for the Federal Risk and Authorization Management Program. Give us the details on what makes this such a big deal.
So we're 17, 18 months into a 2-year daunting nightmare cybersecurity review process with the U.S. federal government. We've put in a massive amount of resources, a couple of teammates on the verge of collapse trying to get all this stuff done. We finally got all our submissions in, all the initial audits and everything else, and got a lot of favorable remarks from the federal government. We're really excited about it. Our sponsors, the U.S. Department of Veterans Affairs, and once we have a contract already with the federal government, we can't perform on it until we get this ATO or authority to operate. But then now that we've got at this stage, we can really start having some more formal dialogue with organizations across the federal government where we know we can be helpful.
Outstanding. And obviously, from a business perspective, I would imagine, and you obviously kind of referenced this already, but I would imagine a classification like this probably opens a lot of new doors, right? A lot of new opportunities for the company moving forward with partnerships.
Yes, and a lot of folks, when we mention the federal government, they're like, "Oh, you're gonna help the military police, better secure an Air Force base or something, or military base or something like that." And yes, that is an opportunity. We're not going to be on the battlefield. There's plenty of support for the soldiers. What we really need to do is support the officers and guards on our own homeland. But then you start just wandering around and just thinking about, hey, I wonder how many warehouses FEMA has, right? I wonder if the Customs and Border Patrol folks could use some additional eyes and ears and voice on the ground. I wonder who secures NASA. The GSA, or effectively the landlord for the federal government or portions of it, they manage 10,000 buildings. The Federal Protective Services has 15,000 officers and guards helping protect those 10,000 buildings. They could use a helping hand. Veterans Affairs. Let's see. I think the chief security officer has on the order of 140 plus police departments he's trying to manage, and there's just not enough resources. So I'm really excited about this. Long term, this is going to be extremely helpful to the country and all those federal folks that need additional support. So there is a very, very positive long-term growth opportunity here.
Absolutely. Yeah, and I want to take a second just to kind of reflect and have you give us your perspective on this. But at the time of that press release, only 262 ATOs or authority to operates have been issued, and 83 companies have reached this in-process stage. What do you think that says about Knightscope and what you guys have accomplished and how far you've come?
It says we're dedicated to the mission. I mean, it is 7 figures worth of expenditure and then ongoing expenditure to maintain the ATO. I also think it says that the federal government is very, very serious about cybersecurity and cybersecurity threats. They're not just allowing anyone to sell into the federal government. And I think as you look at Knightscope, we've got a lot of experience out in the field, starts building a little bit of a moat. Our technology is getting better and better and better, start building a little bit of a moat. You start getting, that level of support from big players like the federal government. It's not an easy thing to just turn on to do business at that level. And I think that moat starts getting bigger and bigger and bigger. So we're really excited about the future.
Awesome. Yeah, not a doubt there's a lot more exciting stuff to come. We have a question from our audience. Rita was asking about elementary school security. Obviously, a very, very prescient topic right now. There's horrible news coming out with the recent developments that we've had. When you're looking at school security, how can the robots, if in any way, impact the security that we have in the schools for our kids? Is this something where we can make an impact with Knightscope robots?
I'm going to answer that 2 different ways. So how you would quickly do it just from a technical standpoint, in a lot of cases, most security professionals know that the layered effect is one of the best ways to do this. So you probably want a K5 or multiple K5s outside patrolling, a K3 on every floor, a K1 at every ingress-egress point for people and vehicles. And then you'd want to treat the school like a data center. Just lock it down and whitelist all the folks that are authorized to be there, meaning the kids, the students, the parents, and the faculty. And unless you're on that list, you shouldn't be on that, and we should send up a flag if you're not on that list. Like, hey, I don't know where that license plate came from. Raise the flag. I haven't seen that profile pic before. Raise a flag. This mobile device has never been on campus. Raise a flag, and that way you can better almost digitally lock down the place as well as provide some physical security. The more horrifying part of the conversation is our country basically can't pay our awesome teachers properly. In a lot of cases, schools don't have enough resources to actually do the curriculum. So it becomes a massive budget problem. And where is the money coming from? We've got a few ideas on how to address that. It's not an overnight solution. We're working on it. We have a couple contracts with schools. I think there might be a few more in the pipeline, but this is kind of require a whole of community, a whole of private sector, and a whole of government kind of approach in order to really address the problem.
Absolutely. Yeah. And kind of in a similar vein, right? Again, when our team was on the ground at the road show, we had an incredible experience getting up close and personal with the robots and seeing what they function like in person. Let's talk about some of the other applications where these robots can go. We talked about casinos. We talked about different standstill places where you're just collecting data. What are some of the biggest avenues where these robots function well and some of the biggest places that these are needed?
Hospitals run 24/7. Casinos, as you mentioned, run 24/7. We're actually seeing a lot of interest on residential side of things, apartment complexes. Certainly, we'll continue with major corporations and corporate campuses. We landed our first power utility company with, I think they started with about 5 machines. Better securing the grid is an important kind of national issue. Manufacturing facilities, logistics facilities, retail. I think it's basically anywhere indoors or outdoors, primarily outdoors, where you might see a guard or an officer patrolling is absolutely an opportunity for Knightscope to help.
Fantastic. Okay, another thing that we talked about when we were at the roadshow, the product development side I'd like to get into a little bit as well, but the maintenance of these robots is something we discussed as well. We were really impressed by the self-charging stations. These things kind of return to charge and power themselves back up. But when it comes to maintaining these things, repairs, if something goes wrong or they break down, how does your team address those? Do you come and service them? What's the maintenance side of the robots like?
Yeah, so it's a subscription service. We don't sell the robots outright. So we have a staff that runs 24/7, 365, monitoring the machines in network and making sure they're all nice and healthy and charging and getting software upgrades or hardware upgrades. So we're on it 24/7 with our clients down our throat 24/7, making sure everything's running. And most of the time, 90+% of the time, if something goes wrong, we can remotely over the air fix it. At times when needed, we can dispatch a technician on the ground there to do whatever else might be needed from a physical standpoint. But yeah, we're absolutely responsible. And think of it almost like Verizon or AT&T having to make sure the network is up and running. We're having to literally do the same.
Sure. No, that makes a lot of sense. The product development side, let's cover that a little bit. Looking at, what you guys have already, the K5, the K3, all of the other products you've got on the market now, what are you guys planning in terms of the future? To the extent that you can talk about it, is there anything else exciting coming up that we should have our eyes out on?
Well, I think the first thing that we're excited about the engineering side of things is recruiting awesome talent. I think cross-functionally across the entire organization, we now have teammates across about 15 states. We kind of double the size of the team. Likely over the next couple of years, we're going to triple the size of the team. And folks in the tech sector are talking about layoffs and all this other stuff. Like, we're hiring. So if you're a patriot, an awesome technologist, a sales executive, go to Knightscope.com, go to the careers page. We've got plenty of openings. I think from a product technology standpoint, there are maybe some back office stuff that we need to be doing. There's a lot of technology that, hey, works for 20 robots, 50 robots, 100 robots, but you start getting to 200, 300, 500, 5,000, like this process or this technology architecture is not going to work. So we're kind of doing a lot of re-architecting, re-engineering. I think from a client-facing standpoint, we've announced that we'll be sending out a K1 hemisphere sometime this year. This is a much smaller form factor of our stationary unit that we've already got a lot of interest for. So we're kind of wrapping up the final phases of that. And then also this year, we'll be releasing the 5th generation K5, which is our most popular model with a bunch of upgrades and changes in architecture. As I mentioned, we've done this for a very long time, and we've learned a thing or two because we've seen a thing or two. So we want to make sure that we continue to improve the technology. So we're pretty excited. We're all kind of in good spirits and a little bit on a roll here.
Absolutely. We love to hear that. You talked a little bit about the subscription service, right? They're not selling them outright. Are there plans to sell these outright in the future? Is it going to continue to remain a subscription service? What's the plan with the sales side of the business?
Subscription is one, highly lucrative, and then highly cost effective for the client. So price point, you're not going to walk into a client who's nickel and diming literally a guarding service and say, hey, you need to pay six figures for something. Like, that's not going to work. Second, we've got intellectual property that we want to make sure we control. Second, we release new software every 2 weeks, new hardware every 3, 6, 9 months, and the technology just keeps getting upgraded and and you don't want to sell something to a client that's not going to be relevant or viable in 6 or 9 or 12 months. And then there's obviously the cybersecurity threat. We want to make sure that everything's under our supervision. So it is not in the works ever to do anything outside of a subscription model, especially if we can return some pretty handsome margins for our investors.
Yeah, no, that makes a lot of sense. And when you're talking about the margins a little bit, again, to the extent that you can talk on that, can you talk about the margin on these robots from creation to the subscription and any time to actually do the ROI on these robots after they've been created?
Yeah, I had one of the most positive calls with a very important client of ours yesterday, and he's just so excited about the ROI on his end. Forget the company, like the actual positive impact we can make on the client side, and he just basically, this is not only phenomenal but just a no-brainer. But for us, crudely speaking, the machines will generate $50,000, $60,000, $70,000 on average, because we got multiple different kinds of machines. And we try to recover the cost of the machine in the first calendar year. We do have a financing facility to make sure from a cash flow standpoint we're okay to do that. Second, third, fourth, fifth year, you're not having to build a machine again, right? So now you're kind of printing money. You have to make sure to focus on lowering and improving the operating costs. So as the technology gets better, the quality and reliability improve and everything else, those numbers start coming down. So net, you're kind of like, I don't know, you're buying a new Tesla every year, but your margins look like a software as a service company in the 55, 60, 65% kind of range, and that's why things look kind of interesting and exciting for us over the long term.
Outstanding. Okay, we'll talk about the shareholder meeting coming up in just a minute, but first, let's talk through a little bit more broadly the plan for the rest of 2022. Where's the focus at for the business? What are you guys planning on expanding, and what are some of your biggest shots on goal throughout the rest of the year?
A lot of what we talked about, growth, robot roadshow, get the K1 hemisphere out, get the 5th generation K5 out, some blocking and tackling, finish off if possible, getting the ATO with the federal government, and then kind of in my spare time, because I've got nothing else to do, we're always, as we've mentioned as part of the public listing earlier this year, looking at mergers and acquisitions and kind of seeing what might be interesting for us. So we're out quietly hunting a little bit too.
Interesting. Okay, so that's a unique point. Obviously, you probably can't go too in depth into your strategy there, but when it comes to mergers and acquisitions, what kind of company, in a broad sense, would make sense for Knightscope? What are you guys kind of looking at as a target, if you can talk about that?
I think broadly speaking, there's probably 1, 2, 3, or 4 characteristics we're looking for. Anything from a technology standpoint that can help our clients and improve the technology portfolio is certainly of interest to us. On the revenue growth side of things, especially if there's some cross-selling or complementary opportunities, or something we can put on the robot roadshow to come along with us, is helpful. Talent, finding the right people with the right skill mix and the right mindset that are relentless and are really focused on the mission is important. And I think lastly, not as important, but something we would weigh in is on facilities. Obviously, we're growing and we're going to outgrow our facilities soon. So we're kind of starting to contemplate, what we might do next year.
Absolutely. Okay, that makes a lot of sense. Let's talk about the upcoming shareholder meeting, June 23rd. Why is this going to be so significant? We've obviously got
It's
a lot
going to
of
be
people
a
looking forward to it.
snoozer. We're just going to do the formalities and just, all in favor, aye, and all that good stuff. No, just kidding. We're eternally grateful for all the investor support we have had over the years that got us to this point. I always often say, join us and be a force for good. Our investors are that force for good. And we try to, put in some extra effort to make it an enjoyable, informative, and hopefully invigorating session. I think correct me if I'm wrong, I think it's like the 23rd at 9 a.m. or something like that, Pacific. And we might have an announcement or two or a couple goodies to share. But we hope people will certainly tune in and kind of talk about the future. I think probably the context will be something along the lines of, it's been a long first chapter to just get to this point. We've had now the most amount of resources we've ever had in the history of the company. We've got the technology working. We've got clients across the country. We're an awesome team, and let's talk about the future. And that's kind of primarily the emphasis.
Awesome. Very excited for that. Obviously going to be tuning in and listening. Let's talk as we close about evaluating the company from a retail investor perspective, right? When you look at this from the business side of things, the future of the company, the potential that this business concept has, what would you want to tell a retail investor about the business and the investment side of where this company's going?
Same thing I've often said for almost the last decade. It's three things, real simple. Do you believe that autonomous kind of pretty stable? Let's put it that way. So if you've got a solution that can address that marketplace on a recurring societal problem with recurring revenue, you got to really look at it. And then lastly, you're betting on a team. And this is the same management team that willed this company against all odds into existence. And the likelihood that you're able to found a company, get it funded, grow it, and go list it on NASDAQ, I mean, you're kind of in lottery category statistics. It's unlikely to happen. We are determined and relentless. We've got the skills, the people, and the resources to execute, and we're going to force this to happen. So we'll hope, as I often say, join us and be a force for good.
Awesome. Bill, all great stuff. Before we let you go, I've got to ask you, what does the busiest man in the business do for fun? When do you even have time for fun? Every time I talk to you, you're in the middle of 1,000 different things. What do you do for fun if and when you get some spare time on your hands?
Knightscope is fun for me. Like this, you got to be a little bit of a lunatic to found a company or even do what we're doing. So as my wife often says, you're possessed. And that's all I kind of think about. I've been picking up the guitar again. So my neighbors are kind of really, really happy about that. Just mostly pick up the guitar a little bit, but running 24/7, Knightscope. I mean, that's all I want to do. It's kind of where I spend all my time. Even when I'm watching a movie, I'm like, oh, that's a cool surface treatment, or that was an interesting font, or we could use that with the company. I should talk to Michael about that. I'm living what I want to be, I'm doing what I want to be doing. And that, most investors should really kind of consider that. My entire net worth is in Knightscope. We're going to force a victory here. And we've often now been announcing pretty consistently, almost every single week, one or two major growth opportunities for the company. We're going to continue that. So we're kind of on a roll. And we'll appreciate all the continued support.
Awesome. Bill, we cannot wait to see what comes next. Always fun talking to you and always a great time to have you on. Thank you so much for joining us.
All right. Good to see you.
Thanks, Bill. Bill Lee, CEO of Knightscope, finishing up there. We're going to keep things rolling into our next interview. We're going to bring on Ronen Luzon, the CEO of MySize, and keep things going. Ronen, thanks for joining us. How are you?
Hey, I'm good. How are you?
Doing great. Ronen, I believe this is your first time on AllAccess. I think we went for one before. We had some technical difficulties. It's great to have you back and get this interview going. Very excited to chat with you. We'll get things kicked off just kind of talking about the company a little bit. MySize has a fascinating product. It's one that I definitely haven't come across before. So can you give us a high-level overview of the company? What is MySize all about?
So I founded MySize back in 2014, and the vision behind it that I initially thought about an idea that I had an issue of ordering clothes online for my kid. And I'm not an online guy. I'm going to the store, buy what I need, and that's it. First time I have this thing, I understood there's a big problem, and that's what we were actually focusing on: is getting this solution out there for retailers and for consumers that will be able to measure themselves, privacy, and easy enough, so they will get the right matchmaking for each item they want to buy online. Then we expanded it to other segments as well, like the logistics and the DIY, but the main segment is fashion and clothing.
Fantastic. Okay, so who are your main customers and clients? Talk a little bit about the clientele, the people that you service. Who are the main consumers of this kind of technology?
So we are B2B. So we're licensing the technology. We're a SaaS model, so we're licensing the technology to retailers. So we have retailers like Levi's, like Nautica, like Gant. On the big side of things, we have on the medium and side, on the small ones, if you look at US Polo or Boys Jeans or Penti in Turkey. We have many clients. We've surpassed the 1,000 retailers clients a few months ago. And today we are servicing not just the traditional fashion business. Today we have uniform clients. We recently, I don't know if you are looking at Formula One, so Haas F1 team just recently started using our solution to measure their employees and drivers, and as well put it on their merchant website for their clients and for the fans to use it. So we're using uniforms as well. We're just now in the process of enrolling a huge American vehicle company to use our solution for measuring their employees, so they can get the right size of uniforms for each and type different roles. And that's mainly for safety, but as well for operational. They have factories all over the globe, and it's a big hassle to understand what size of uniform each and every one of your employee needs. So we're kind of all over the place in terms of uniforms, in terms of sizing, in terms of lingerie, sportswear. We have a solution for it all now.
Awesome. Okay, that makes a lot of sense. Let's talk about the growth strategy of the business a little bit. How do you attract new customers? How are you growing the clientele? How do you find that new customer segment as you move along? Is it sales, direct outreach? What's the growth strategy like?
So we have several growth strategies. One of them is direct sales with our sales agents that are going mainly for the big clients. It's like Levi's, like Nautica. These type of clients are working directly through our sales agents. And we have medium and small ones we're using through our partners. That we have like Shopify, like WooCommerce, like Wix, that we have plugged in to their platforms, and through those, the retailers, our customers are enrolling to our backend system, and they can open an account for almost without any effort and help from our side. But we're always there to help them, and that's usually being done through a digital means. We are always using the partners, like we just recently finished several events with GK Software. GK is, I think, the largest POS vendor, software vendor for big retailers. They are the vendor for Adidas, for PVH, and many others. And we are partnering with them to enroll our sizing solution, our sizing technology, to their software base and help their retailers, both online and offline, to get a better size recommendation, get a better matchmaking, reduce the returns, increase the conversion. There's so many different parameters that is happening when retailers start using MySize. So partners is another avenue of acquisition of new customers that we are focusing on.
Outstanding. Okay, so let's talk about some recent developments in some of your more recent news. The first quarter results that you had come out, outstanding growth, 1,400% year over year to over 400,000 in revenue. What contributing factors led to this? I mean, what parts of the business had to come together for such an amazing jump in revenue over the last year?
So there were several things. First, when I started the company in 2014, it was just a vision, it was just a dream. There was nothing really there. We didn't have any product. We didn't know that the product would actually work. It took us about 5 years, and only in mid-19 we started selling the product. So it's been a long time until we had the first product actually launching, and then COVID came. In the first year, retail was completely dead. Even though today, thinking backwards, you would think that COVID probably done good help for your business. So generally, yes. The answer is yes. But the first year, the retail was completely dead. A lot of retailers, if you remember, Brooks Brothers, JCPenney, Century 21 were bankrupt because of that. Because everybody was minimizing and the store was closed, and majority of their revenues were coming from offline stores. First year of 2020, there was nobody to talk to. The business was pretty dry. When retailers understood that the online is starting to boom up, and it jumps for several percent out of the revenues to 30, 40, and even more in some of the retailers. Retailers understood that they must have technology tools in order to actually work with those amount of revenues that comes in from online. And then we start kicking in a lot of retailers from our online business. So that's actually contribute to our bottom line from the MySize ID and box size, and we can see a dramatic increase on that front. Another thing that we've done, we've done an M&A transaction with Orgad. Orgad is a merchant. Online merchant that is working mainly in the US, but in Europe as well, and Asia, for selling goods. And that's another arm that we're developing under MySize Inc., where we have a technology arm that's developed the tools for retailers. And we acquired Orgad, which is a management and stores that they are selling mainly online. Now we are building a brick and mortar stores as well. They are using our digital and technology solutions that we're selling out to retailers. They are using it as well, and they are producing as well, generating revenues. So together, these two avenues that we have, these two business that we have under MySize Inc. actually generated this growth, and we can see that this growth is just started. And we will see from MySize, from the technology, and from Orgad, from the merchant, we can see big numbers. And we've put numbers at $5 million by the end of the year that MySize will generate. That is roughly what's our burn today. That hopefully next year we can be cash flow positive.
Outstanding. Okay, so let's talk about that path to next year, right? What are some of the risks you see in the business? What are some of the things you're going to focus on as far as growth? What are some pitfalls you're trying to avoid? But what is the overall strategy for getting to that cash flow positive scenario look like over the next year?
So M&As, one of the main things that we're focusing today is M&As, is bring more of a merchant, more of a stores under the Orgad arm, that the digital merchant, to get more acquisition on those end, and to increase our footprint and stores that we have selling goods. And we know and we can see that we are, with the technology that we are developing, retailers are becoming much more profitable in terms of operation. Using our technology, they're reducing their returns for about 50%, 50, which is crazy. They increase their conversion 3 times as much. We can see retailers jumping from 2 to 9 to 8% in terms of conversion. That's huge numbers in terms of revenues. That's one of the things that we're doing to our own brands and own business under Orgad. So that's one part. The other part is continuing our penetration. We're working with retailers in many areas. We just entered South America as well. We've established a joint venture with one of the leading companies in South America, in Brazil. Start penetrating this area as well from other areas the same. We've just introduced in January, this January in NRF, the smart mirror, the first look smart mirror, where this is our first product to the brick and mortar store. And until recently, where MySize was only for online business, now we are for the brick and mortar stores, for the offline business. So we are bringing a full omni-channel experience for the consumer of the retailer. So he can start his journey by visiting one of the online stores or one of the offline stores. The mirror understands and knows who is the customer is, offer him sizes and offer him items based on his profile, his measurement profile, giving him different items that actually help him to finish the look. And the consumer can finish the transaction when he's standing in front of the mirror. So there is a lot of happening in MySize. Today we have a full solution for the retailer, both online and offline. And that's we can see from the past events and the feedback that we get from retailers. This is something that they're looking for a long, long time.
Amazing. Okay, so we talked about the revenue growth in Q1. What kind of guidance can you give us for Q2? Can you talk about any expectations for revenue growth, any issues you see there, or what kind of guidance can you give us moving forward?
So we haven't delivered any guidance. The only guidance that we've done is that we've finished the year in on $5 million revenues. That's the guidance that we've delivered so far. And as it looks now, we're surpassing it as we've seen the numbers now. Numbers looks good, and the company, I think, in terms of pricing that we have today on the stock, I think it's undervalued in terms of what we have and the cash that we have in hand and our performance. So as it looks now, we will finish this year looking very good, and second half of 22 will look very promising to MySize.
Perfect. Okay, now we talked about the product development side a little bit and the acquisition side a little bit more, but I do want to talk about some of the acquisitions you did and some of these new products that you've launched. 4 months ago, it was the First Look Smart Mirror, which was described as the ultimate omnichannel solution for retailers. Can you give us any updates on how that's been received, any feedback from clients and customers, and how has that been rolled out so far?
So today, the main thing for retailers that the brick and mortar stores, the offline business and the online is somehow separated. You can see some of the retailers, for example, if you go into Zara or other retailers, when you're buying online, you can't return the product in the brick and mortar store and you can't replace it. That's two separate business, even though the consumer is the same consumer. So what we've done, we've bridged these two worlds. Today, when the customer comes into the online, he can see his basket through the First Look Smart Mirror when he's stepping in the store. The First Look Smart Mirror can help you in not going to the fitting room, not needed to stand in queue for the checkout. You will do everything in front of the mirror. So whether if you are inside a fitting room and you have a First Look Smart Mirror inside a fitting room, or just the mirror just in the freestanding in the store, you can do your entire transaction. You can get your size accommodation. You can get help from the mirror in terms of other items that works for you. And will give you the size. Will give you what's the cost of this. If it's in stock or not, and if it's not in stock, you can buy it online or in different stores. Everything is accessible for you as a consumer through the smart mirror, and that's something that the retailers were looking for a very long time. And today we get a very good feedback from many retailers. We just came back from MYSZ in Germany, which is one of the leading events in Europe for retailers, and we've seen huge names that were just queuing there to see the mirror, how it works on GK software booth, and the correlation with GK software, that as a retailer, it's completely brainless for you. It's no brainer. You put the mirror in, everything is connected. You have the checkout there. You have your entire inventory, your entire catalog. The integration is done in no time, and you have a product that actually can help increase your sales and remove any obstacles that were until now in brick and mortar stores.
Fantastic. Okay, so now that we know that, you also referenced Orgat a little bit earlier, but I want to dive into that in a little more detail. How has that been received so far? It's the Omnichannel e-commerce platform, and obviously you guys acquired that in Q1, but how has that impacted the business thus far? Have you seen positive results from it? Any issues in the rollout, or how has that been on a general basis?
So any first acquisition is a bit dodgy at the beginning. It's a bit uphill to get a new company in, a new people in to understand the business, especially when they are private and we are a listed company. So at the beginning, all the getting them on board and understanding how we work on a public traded company and to do everything together was a bit tough, but we worked, and today they are complete part of MySize, Inc. They understand everything, and we can see the dramatic help that the cash flow and being a publicly traded company for a company like Orgat tremendously helped them. In reaching their goals, in reaching more of channels that they can buy more merchandise. Some of the people that we have in MySize, some of the management that we have very strong connections with other retailers, other distributors that we work today on MySize that helps Orgat to bring more buying channels that helps their bottom line, helps their variety. And today they are selling not just in Amazon, they open more venues to sell their items in eBay and private labels that increases their offering, increasing their sell awareness to other markets that we can see affects their the revenues, the streams, and everything to do with the logistics. That's something that MySize can help as well. So all in all, we can see today that they're on board, fully on board on MySize. We can see their the bottom line increases. We can see their operating cost as shrinks thanks to MySize. So this is something that we can see contributing to MySize Inc. at the end, and that's what we're so positive on how year ends with in 2022.
Terrific. Okay, a couple of questions about the financial side of the company. The chat has a lot to say about this for sure. But any rumors of a reverse stock split coming up? Is there any guidance you can give us there? Any kind of hints about where that may be coming from?
So as you know, we are below the dollar in terms of MySize, and we have the warning from Nasdaq because we have over $5 million in cash. So we get an extension from Nasdaq probably on July. So that's something that we can see. We can probably will get the extension. This is an automatic extension by Nasdaq. Then we're doing everything in our power to overreach it and not to need to be a reverse split. I think that what we have in the pipeline and the market will see that we will be very positive in terms of announcement, in terms of revenues. So hopefully the market will understand that this is something that needs to come in and something that probably will hit over what we actually expected and will not need to do any reverse split. But this is something that me personally, I would avoid in any case. This is the last resort from MySize. But at the end, we need to stay a publicly traded company. This is one of the assets that MySize have for the investors as well. And we need the trust and from the market, from our investors, to actually understand where this company is going, to understand what we have in hand. And what we have today is something that is unique, and we are solving a real problem of the retail market. The retail market is changing, and we see the numbers from each and every retailer that is showing their results. We can see the number of new customers are increasing for retailers. They're coming to the stores, they're buying more. So technology will be here to stay, and this market, the retail market, will need more and more technology, and MySize is one of the key technology company that's here. I don't know if you are aware, but recently we've seen many transactions in the field of retail tech. Walmart bought a company, and Zalando from Germany bought another company. Facebook acquired another company now. There are so many others that that the big players are buying companies like MySize. So you see that the need is here, and MySize will do the same.
Absolutely. Ronen, it's been an absolute pleasure having you here the first time on All Access, delivering a ton of great information. Obviously, a lot to put on our watch list in the near future. Ronen Luzon, CEO of MySize, thank you so much for being here.
Thank you very much.
Fantastic. All right, we're going to bring on, I believe, Mitchell in the background, who's going to bring us a market update on where things are sitting for the day. Mitch, how we doing?
What's going on? We're still in a little bit of a leakage, but we're getting a little bit of a bounce here. I'll go ahead and share my screen so you guys can see that. Let's take a look here at the SPY itself first. All right, so SPY was right here at the open. We started going on up just a slight bit, but have been just slowly leaking down here. And we'll take a look here at the sectors. That's what I always like to do here. So let's take a look here. What is up from the open? What is down? Everything is down, as you guys can see. Sea of red out there on my charts. And when you see that sea of red, that just shows us turning around. What you see on my screen here is Lucid. I'm actually short here from the 1890 area, still short on Lucid. I got a couple of trades that I did today, so I'm going to go through some of those trades already. I'm killing it on them. And we talked about these before the market opened, right? I talked about Starbucks short, Lucid short. Those were going to be my two shorts. But one trade that you might have not caught, and I would definitely check out the Benzinga Pro Trade Ideas widget, was the BTU trade, which is actually our best trade on the day. So if you want to check it out, definitely get the pro at benzinga.com for your 2 free week trial. And of course, check out our Trade Ideas widget in there. Every single morning, I'm in there throwing at least one of my best trade ideas for the day. I tell you why I'm looking at it. BTU was all about CPI data. If we could get it coming in hot, I was going to look for a breakout to happen at the bell. We got in this one, and it was a great trade. We got in this one right at 25.81, selling some into the breakout at the 26. We sold some into the 20s, then eventually getting out the rest of it at 26.76, all the way up here, guys. The resistance is what I was seeing it coming into through that 27. Didn't want to let it get too close to that and then not get the profits. Already took the profits on BTU, and Starbucks was the other one that we were looking for a short. I did what they call a VWAP fade on this one, where this one comes on down, and when it came right back above this VWAP, I got short at 77.20s here, and then was able to take some profit into this downside action move on the first night action. And when it broke right here, the low of the day, previous low of the day, I went and I took some profits on Starbucks, taking some profits into this move, taking the last profits down into the 76.50s. Was a great trade for us on Starbucks. And let's take a look here at what's getting hurt the most. What's getting hurt the most is what we expected, technology. You could see that with stocks like Microsoft taking a big hit, Apple taking a big hit, Google down 3.24. A lot of these stocks are just getting drilled down. Meta's getting drilled down for the second day in a row. You can take a look here at NVIDIA. Look how this is getting dragged down 5% on the day. Definitely getting hit hard here. If we take a look here at the Qs, you can see how much we've been dropping in the Qs. Haven't really showed any bounce over here in the Qs. It was just leakage out the open. That's showing you that definitely technology leading us on the way down here. Down 3.16% on the day. If you take a look at it on the day, consumer cyclical also looking weak here. What's the worst ones there? Resorts and casinos. Why could this be happening? Because the demand for travel is going away. And one of the things that I'll note is that I have been looking at the airline tickets, and even airline prices right now are starting to head downwards. Why? Because there's demand destruction going on, I think, right now in the travel industry. And you're seeing it here. LVS really getting hit, MGM getting hit, Caesars, all these stocks getting hit. But let's take a look at maybe like a stock like Hilton, and you'll see some continued weakness here in lodging. As you see, Hilton down 4%, Marriott down about 3%. And this is all due based on what I'm thinking is demand destruction in the travel industry. All right, let me go ahead and take a look at some of these comments. Actually, if AT can give me access to the, I'll look at the YouTube. I have it right here. I pulled it on up here. If you guys got a stock, you guys want to check it on out, let me know in the chat. And I said it before I came on. If we get 100 likes, guys, I'll take a live trade right here. We got about 14 minutes left. Willing to take a live trade, but I need you guys out there to smash up those likes. And of course, throw up a stock if you guys want to go ahead and touch it. Utilities even lagging today, but the real area where I'm seeing some weakness also coming in here is even on oil. Oil having a pullback day today. ExxonMobil coming on back there after pushed on up there to 103. Tried to hold that 61% retracement that we talked about in pre-market, but then now breaking down. And this is when I usually see the worst action in the SPY, is when we've seen technology, all the other stocks getting hit, but including energy. And you see energy now down 2.1% on the overall day and 0.86 from the open. We're going to see what happens if oil can catch a bounce, but right now, it has not caught anything. Goldman Sachs coming in today and downgrading Netflix. This looks actually like potentially maybe a short position here that you could open up off of the 184. But I'm not going to go after this right now unless, did we get the likes? Did we get the likes we need? We have 58. We need some more. Smash it on up. I do see SPY and Apple mentions in the chat. So if you guys got a stock you want to look at, throw it up on there. All right, so Netflix is coming on down here. It got a downgrade by Goldman Sachs, so you got to keep an eye out and see what happens on Netflix. Also, for that being mentioned, Disney. Disney was coming down after they kind of fired their content chief and still struggling right now. Down there towards almost breaking the 100, and that's almost pre-pandemic. As we start getting towards an 82 level that it was in the pandemic, if we break 98s, we could be down there towards the 82 level. All right, let me go see what's going on here. Let me catch up with the chat, see what you guys are mentioning in the chat. Any stock you guys want to take a look at? All right, well, if not, I'll just keep going through here. Lucid still working down on the downside for me. So this trade working really well. I waited towards the pop to start turning around. And what did I do is I used the 3 chart look that I use here. And so I'll show you guys the 3 chart look. And so I was using what? I was using the SPY here when it started bouncing on up and I started seeing this washout come right back into it. That's when I started jumping into Lucid. And you can see here, right? Like you can see on the Lucid chart here, how it highlights that area. And watch how when that started happening, the fade started happening, that's when I started hitting on to Lucid at 1890s and using that 19. And if the SPY would have came back up, let's say through 395s, I would have got out of this trade. But I stuck around as I saw the weakness in the SPY continue. And now you're seeing Lucid just trickle on down here. So I did take some profits into the 1840, but still have half of the position here. And Starbucks is another one that I called out short that looking like it's setting on up again for a re-short here. But definitely, I need some more likes, guys. I see 58. Let's go. Get them on up there. Trying to take some trades. All right, I'll refresh this just in case we got more likes and I'm not catching them. 75. We're almost there, guys. Who wants to see some trading action? Hit the like, guys. Let's get to 100. All right, I'm going to keep going through stocks. You guys know which definitely the stocks I'm looking for shorts, but let's go take a look at stocks like Tesla. Tesla did have a catalyst today, but now starting to get faded off of that pop that it had right here at the open. We'll see if that can continue here. Definitely seeing some weakness in Tesla. The 700 level, I think, was important. Now that you're starting to really close underneath that, see if you can get back above that for your bulls. But if you bears are looking at the levels, you want to see 695 start breaking down and heading down through the 700 and forgetting about this price zone. UBS with the 50% upside rating yesterday. Not looking that great there, UBS, but hey, you know how it goes, guys. All right, so we got about 10 minutes left here. I'll be on until 11 Eastern. Let's keep it going. I see a stock thrown up in the chat. Juego de Manzanas. I'll give you a shout out there. And yes, I speak a little Spanish. Some people just don't know that. I keep that one in the back pocket at all times. But yeah, my my Apple game. Apple game. That's what that stands for in Spanish. So let's take a look there. He wants to actually take a look at Mastercard. Let's take a look at Mastercard. All right, Mastercard has been struggling, and you've been hearing more and more in the fintech how they're struggling. Stripe talking about struggles in this area. And that's one of my favorite private companies is Stripe. And you can see that the struggle is continuing on stocks like this, especially kind of in the fintech world. You've been seeing the struggles coming from Square or Block, if you now call it, and then also PayPal, but Mastercard turning downwards now and really starting to look bearish. If you take a look here, I had a nice trend line that it kept trying to break out above. And I talk about this constantly, how we're looking for attempted breakouts, right? And so here you got 1, 2, 3 price actions to try to break out. I always talk about if it doesn't break out on the 4th breakout, we're going to be looking for a retrace to support. And that could cause the pattern to completely break down on the long side. And so here you guys have it. The stock goes up there. It comes back down, holds that longer term support down here around the 310s or 311s, then comes back up to here towards the 370s to break out. And it just can't do it. From that point, you see it come back down, comes in and builds support again. It tries to get up there to 370s again, but couldn't even try it. And you can see here multiple times rejecting it. And right here, the high at 368.31 showing me that it doesn't want to get there. And now you're seeing that downside action. You could see it take out this 320 on the downside. That's what I'm seeing right now. And it looking like it wants to come back there closer towards support. You could take a look at the monthly levels to find that support. And that's closer down here towards the 317, but let's put it towards the body around 315. That's where I see the stock heading right now, at least from my eyes on the downside, but always determine your own risk. All right, let's see if there's any other stocks thrown up there. LI always rised. I got you. Let's go ahead. Let's throw that one up. Let's do LI here. LI Autos just coming back there through the 30-40s. We want to see this get on up there through the 33s and continue towards the upside of 40s. But this one at least bouncing back here. You're seeing the monthly candle. It's not looking too bad. And one thing that I'll state, Chinese names are actually not looking that bad. I know that a lot of people are throwing warning signs that you don't want to be trading Chinese stocks. But I can tell you right now, these stocks are actually starting to look good technically wise. Of course, the story can always change if we get a macro catalyst out there. But keep your eyes on LI Auto. And for that being mentioned, look at NIO because they trade hand in hand. NIO is actually going down today a little bit. Let's take a look at the daily on LI. And you can see here how it's trying to build up here, trying to break back through a trend line here. If you draw it down here, you can see it's trying to get above that 30-50, and it keeps failing when it gets up here towards 31. Let's see if it gets back up there today. And I'll take a look at the 15-minute. You can see that bottoming action building up here in the 29.80s. Now it's trying to get back on up through here. Let's see if it gets on up there and gets towards, let's say, 30.80s. Then you can maybe take out the 31s on the upside. Let's go to NIO. NIO is actually on the bottom side of the 1830s. We'll see if it gets back through 19. And also keep on watch if you're watching these XPEV. You want to keep these all in watch. But of course, if leaders like Tesla in the EV, Lucid are going to keep coming on down, Fisker are going to keep coming on down, then you got to be careful about the EVs out there because they could easily come out of favor. All right, let's go ahead. Let's see what we got on out there. Did we get the likes that we need, guys? I want to take a trade here, but I want you guys to smash up that like. We need 15 more likes, guys. There's over 240 of you guys watching right now. So do me the favor. If you need to sneak the iPad back on up because you're working right now and you can't let the boss check out that you're trading, go ahead and just throw something or something. Make a distraction and hit that like button. Like us up and support us as we support you guys on out there. Looks like we only need 9 more likes, guys. I see 91. I'm getting ready to take the trade, but you guys got to get it on up there. And if we don't hit 100, I'm not taking it, man, because I'm probably going to end up paying for this trade. So you guys on out there, do me the favor, smash that like button, and let's keep it going here. All right, guys. So I've had a great day here with Starbucks and BTU. That was the best trade on the day. BTU is actually back down towards the VWAP. We'll see if this can hold 26 pullbacks and get right back on up through there. 98. I need 2 more likes. Let's do it. All right. So let's talk a little bit about when the Fed talks stocks. So Feds won't probably be mentioning comments probably today, but maybe on Monday you'll start seeing more comments. Of course, you can pay attention to see if anybody puts out comments. But the reason we were watching CPI data, a lot of that was based on the fact that we were going to see how the Fed would react on this data. And it just points to more and more how the Fed is going to have to fight inflation stronger. And so you could see more of that 50 point basis hike rate. We'll see what happens there. Of course, that'd be in September. So we still got a little bit of ways away from there. Where I think we're going to start seeing some mentions on out there from the Fed. But of course, nothing has been mentioned right now, at least from my eyes. We'll keep watching to see what happens there. Crushing SPY and AMD put, says SRT8 Challenger. Hey, go do a little burnout after you make that money. Can't blame you for it. Just don't get in trouble. Don't say it was money, Mitch. All right, let's keep going. Let's take a look at what's going on out there in basic materials. Looks like silver and gold doing well today. Why would that happen? That would happen because inflation trade, right? And so let's take a look at GOLD, which has been having a great day today. Really started taking off up there towards 2050s. So if you're looking for inflationary trades, look how that's working well today. Look for a laggard. Let's see if we can find one. NEM having a really good day there. Let's take a look at AU. That's another one of my favorites. Really strong day there for gold and also for silver. So take a look at some of these stocks. We'll see if it can continue the trend, but stocks like MAG, AG, PAAS. This is why I like doing industry analysis, because you can find some pockets of strength a lot of the times in the market, but you got to find it and you got to be looking for it. There we go, guys. We just hit the 100 ones. Let's go ahead. Let's try to get Starbucks here, guys. I'm going to try to take a look here, try to scalp Starbucks into this move. But first thing we need to do is definitely take a look at the SPY to see what's going on in the SPY and see if we can catch a move here. So SPY is trying to head down towards the low there. We'll see if it takes out the low here. Starbucks is a little bit away from the VWAP. I wanted to get short somewhere around 76.75. So I'm going to look for a little pushback towards 76.70 here and then look for it to take out the lows here. But the SPY is already coming on down here. I'm still short on Lucid, just to give you guys that insight too. That's down to 18.17, and I got there at 18.90s. Once it breaks through the 18, I'm going to take a little bit more off to take some more profit. But let's see if we can get Starbucks here to bounce just a tiny bit here towards the 26.70s, and then we can get short. Let's see if we can get it into this area and then get the short on. I don't want to jump into the 60s because it could easily just pop to the 70s and stop me out. I got to keep a tight stop on this one. So let's see if we get a little bounce. Any other chart setting on up here? Let me see. MU, oof, washing out already. AMD washing out also. So tough day out there, guys. Definitely seeing some downside action. SPY heading down towards the low. Tesla heading down to 695s. I don't know if I'm going to be able to get this Starbucks in here, but like always, guys, I'll be trading and continuing the action in the chat. So don't forget that, guys. Don't forget that. I'm keeping the action in the chat. You guys keep it up there, and I guess I'll throw it back to the one and only, the best dressed. I'll give him that today. My man, Michael Murray. Look at that smile. And I can't wait to get back out there with you, man, and check out the town again, because I'm liking the swag, man.
That was good times. Yeah, I forgot about that, man. We got to get you back out. You just moved, right? You moved closer to Detroit?
Man. Yeah, well, closer to Detroit. I'm on the east side now, so at least that should help. But who knows? The way things are going, I might have to just come to Detroit.
I mean, we got room here, man. Come on up. Yeah,
all right.
We're ready
for
you.
See what happens, guys. Stay battling in the market like always, guys. One of the things that I always say is don't focus so much on kind of results. Just focus more on your system. And if you're sometimes getting into a rut, remember, I always say this about day trading, knowing when to hit the gas pedal and knowing when to hit the brake pedal is so important. And if you're able to master that, that's how the best traders keep the profits going. All right, Michael, go back to it and get to those stories, because like always, the story is everything.
There we go. Money Mitch, Mitchell Hodge coming on in. Thank you, sir. We're going to keep things rolling with All Access and move right into our next interview. Very excited to talk with William Trainer, the CEO of Vicinity Motor Corp. Let's bring him on. Will, thanks for being here. How you doing?
I'm doing great. Thanks for having me on.
It's an absolute pleasure. I know we had our prep call yesterday getting ready for this interview, and I know we had a lot of exciting stuff teed up to talk about, so can't wait to jump into it. We've got some assets, some videos, I think, and some pictures, some of the vehicles we're going to talk about. But let's start off at a high level. Let's learn a little bit more about Vicinity. I believe, if I'm not mistaken, this is your first time on All Access, so break us into it, give us a profile of the company, talk a little bit about what you guys do.
Sure, great. Well, we're a mid-sized bus manufacturer. We've been in business since 2008, and there was really a need. The transit authorities were really looking for a true purpose-built mid-sized product that really wasn't in the marketplace. So back in 2008, we entered into a strategic partnership with the province of British Columbia up here in Canada to design and manufacture a true purpose-built mid-sized product. And it's been really extremely successful across the Canadian market space. We have over 90% market share up here in Canada, and we're really expanding very rapidly down in the U.S. as we go through. I'll tell you a little bit about a new factory that we're putting in place in Washington State, and we're really transitioning well into the EV space. You know, when we look at the market today, the market is really changing into EV. Everybody's looking for a cleaner, greener alternative vehicle, and we feel we've just got a tremendous lineup that really hits that market.
Perfect. Okay, good way to start. Let's talk about your customers a little bit. What kind of clients do you guys service? Who's using these vehicles? What kind of market segment are you working with?
Sure. Well, traditionally, we're going after government agencies, government transit authorities primarily. So when you look at buses on the streets today, that's really what we're selling. But as I said earlier, we have a mid-sized product, so we're selling into the government agencies.
Got it. Okay, that makes sense. And let's talk a little bit more about the vehicles. The production process specifically. How long does it take to get one of these up and running? What does the cost structure look like? As much as you can talk about that, what does the creation process look like here?
Sure. So when we go out, most of our product is sold through RFPs. So the government agencies are putting out tenders for the product, and usually we have anywhere from 9 to 12 months lead time from time of order to delivery. And we manufacture the product ourselves. So the manufacturing process in itself is only about 3 months, but it's the lead time, you know, securing the parts, getting the factory set up, and actually producing the vehicle.
Outstanding. Okay, now facilities in Ferndale, which, if I'm not mistaken, is where some of these facilities for production are based. Any updates from the facilities, how they're functioning? When were they put in place? Any details you can give us there?
Sure. So our big push, particularly with the EV here, is to meet the Buy America requirements, and for that we have to really manufacture the product in the U.S. So we started a new factory, did groundbreaking last year with Governor Jay Inslee in Washington State, and the factory, we just had a large tour with the California Transit Agency group here this past week. Our factory is well into the production stage, construction stage. We should be actually paving the yard here this month, and we're looking to get up and running in Q3 here.
Perfect. Okay, before I move on and talk about some of the recent announcements you guys had, I want to learn a little bit more about the genesis of the company, how you got involved with it, where this kind of all spawned from. Can you talk about the beginnings here?
Sure. So in 2008, like I said, there was the need was there. You know, a lot of the competitors building large size product was really taking 10 feet out of the middle of a 40-foot bus. A 40-foot bus is really the workhorse of the vehicles. So we purpose built a 30-foot, and myself and 4 other partners founded the company in 2008. We started off really with you know, standard diesel buses, CNG buses, and now we've purpose built our electric vehicles.
Perfect. Okay, so let's talk about some of these recent announcements. Yesterday, actually, you announced the 1-year extension of the maturity date for your $10 million debenture. Give us the reasoning behind this, why it happened, but more importantly, why it's so significant. What impact is that going to have?
Well, you know, we're looking. There's a high cost to starting up the factory and getting into production. So the only real debt that we have right now is a $10 million debenture that was due to come up in October. So we extended it out another year. It gives us some breathing room and some capability really to get our factory up and running before we repay that loan.
Understood. Okay, so when you're talking about the cost, actually, let's dive into that a little bit more. What does the margin look like on these? What's the cost structure, and what is the profitability of these?
Sure. So when we look at traditionally, market is we try to look for a 20% margin. On the electric side, we actually get a little better than that. So we should be looking at 25, close to 30% margins when we get our when we're up and fully in production. Um, the vehicles themselves, if you look at a vehicle, and we're looking at electric because that's what's trending, that's where the market's going, that's where everything's transitioning. In fact, our sales pipeline for this year is 70%. Our backlog right now is over 70% electric vehicles for future production. But on a cost value, when you're looking at it, a standard 40-foot bus is somewhere around $1 million, where ours is coming in around the $400,000 to $500,000 range. So it's considerably better priced than a bigger vehicle. And if you look at the market today, you know, our vehicles being a mid-sized product, particularly coming out of the pandemic, pre-pandemic, we call it 100% utilization rate of vehicles on the road, these transit vehicles. But right now, we're running anywhere from 40 to 50%. I think the best transit agencies have hit 60% utilization. So when you look at our vehicle, you know, having a seating capacity of, let's just say, you know, a total capacity of 30 or 35 people that you can put in the vehicle in a, you know, a standard 40-foot up to 60 people, we're seeing a lot of vehicles that aren't being utilized. So if you want you know, a great value vehicle and you want to enter into the electric space, you know, our vehicle just makes perfect sense today, better than ever before.
Got it. Okay, and when you're talking about the production process, which is obviously what you just ran through, talk to me a little bit about the suppliers for the materials that are needed to make these come together. We've obviously had a huge supply chain crunch, especially in recent times. Has this impacted you in any way? If so, what kind of impact has it made on the business?
It has, you know, it's impacted absolutely everybody, ourselves and our competitors. And what we've seen in the market is it's really the microcomputer, the small little chips that have caused a lot of difficulty with the supply chain. And you know, we've had the same difficulty as some of our competitors. But what we've tried to do is we've really tried to scale out our supply chain so that we have multiple suppliers for different products. You know, if we look back here, you know, 6 months or a year ago, there was batteries were a major problem trying to secure batteries. So we have 3 different supply agreements for vendors for the batteries alone. So we've really tried to look at the market and see what we can do to ensure that we can keep our product running off the assembly lines.
Got it. That makes a lot of sense. I know the semiconductor shortage has been huge all across the industry. I've been on the lookout for a new truck for the last 8 months and cannot get one. It's just it's incredible what a crunch we're in right now. So I know where you're coming from there. Other recent news too. Let's talk about the upcoming investor conferences you're going to participate in June. Any takeaways from those? Anything we should be on the lookout for?
No, you know, when you're looking at the, you know, ourselves and where we see ourselves in the marketplace, we just think we have tremendous value right now. You know, when we're looking at our company and looking at the comps as opposed to other vehicle manufacturers in that space, you know, we've been in business since 2008, so we have a lot of customers right now that are transitioning into the electric vehicles. And that customer base is really, I think, what sets us aside from a lot of the competition coming into the marketplace today. We have well-established customer base, particularly, you know, for the public transit agencies.
Got it. Okay, on the partnership side, when you're looking at what you guys have done here, there's been a lot of activity and movement for Vicinity, but you announced a strategic partnership with Sustainability Partners to accelerate your government fleet electrification. How has this been going? Any updates on that and anything that's been significant so far?
Yeah, there's an awful lot of different partnerships that we've entered into, you know, over the past while. But Sustainability Partners, what they do is they provide alternative financing for a lot of the government agencies. The contract that we're working on, there's one I can't. Sorry, I shouldn't get into the details of it. But you know, they have they're offering complete finance packages, alternative finance packages for vehicles that are, you know, greener more sustainable vehicles, and it's just a great fit for us. We've had we've entered into a good relationship with this group, and we really look to see that there's a lot of business coming down the pipe for us.
Absolutely. And on the partnership side of the business, obviously this is a key growth driver for you guys. Are you looking into further partnerships? And if so, what would qualify as an ideal partnership or a supply relationship like the one you just announced?
Well, if you, for a lot of them that want to walk through a deck, you can take a look at some of the partnerships that we have announced, and we've tried to really look at some of the supply partners and long-term partners for growth. One of the ones that I'll talk about is EAVX. That's a division of the JD Poindexter group of companies. For those that don't know, Poindexter is a private company, a couple $2 billion a year in sales, but they're the largest body manufacturer builder in North America. So when we say body manufacturers, when you look at these UPS trucks and these walk-in vans that are on the market today, it's something that a lot of people want to push into because last mile deliveries and such. Well, they produce over, I think, 66% of all the walk-in vans that are sold in North America. So, having a strategic partnership with a group like that, they're looking for electric chassis to put their bodies on. And we are, right now we're developing product that they can put on their chassis. When we look at one of their groups, the Morgan Olson, there's 40,000 walk-in vans sold every year in North America. They sell 30,000 of them. So they've got a good sales force, they've got a good customer base, and they need electric chassis for that customer base. We're developing an electric chassis right now to fit underneath one of their vehicles, and a lot of the vehicle lineup that we have fits very well with their group of companies.
Fantastic. Okay, I know we've got your deck pulled up here too, and you referenced a couple of the slides in there. Let's take a quick walk through in here. Anything specific you want to point out and can show us through these assets?
Sure. Well, if we look at, I think it's slide 6 I'll go back one there. 5 is good. So when we look at our vehicles, so where we position ourselves in the marketplace is we really want to be laser focused on this mid-size product. So when you look at it, our small light duty class 3 all the way up to this class 5, 6 vehicle, these are all electric vehicles that we have. When I say we're focused, a lot of the corporations are looking at, they have vehicles from large to small, where we're just mid-size focused, and we have a dealer network that we've put in place throughout the U.S., and we're selling into that range of vehicles, which I think makes a huge difference over a lot of the competitors that we're in. But if you just look at that range of vehicles that we have, when you look at from our 26, 28-foot Vicinity Lightning down to our light duty class 3 vehicle, all of those vehicles are purpose built. All of them have onboard charging. They all have a hydraulic brake, so they all are very ease of use for the customer base that they're going into. The vehicles that we've designed, when we really designed the vehicles, we took a different outlook than some of the competitors. We looked at it and said, okay, what's making Tesla so successful selling an electric car? Well, it's ease of use. You buy the car, you take it home, you can plug it into your standard electric power grid and do an overnight charge. All of our vehicles were designed with that automotive type technology in mind. And it makes a huge difference. If we look at some of our competitors coming out with very large vehicles, you got to bring a large power grid in to power it. A lot of them take 3-phase power, where ours can charge on the standard grid, and they're all purpose built. Talk about our little Vicinity Lightning there, which is really gaining a lot of traction out in the marketplace today. It's got the batteries in the low floor section of the bus, so it's a very, very good drive. It's got a low center of gravity. It's got the onboard charger. All of those vehicles have hydraulic brakes, which makes ease of use for the customer base that's buying it. They don't have to go out and have a commercial air brake ticket to drive it. So I could just go on, but we're very proud of the vehicle lineup, and we're really laser focused in that mid-size product range.
Awesome. Thank you very much for walking us through that. It's all good info. And I want to switch to the financing side of the business a little bit too. Tell us a little bit about the Q1 report that you issued. Walk us through some highlights there. What were some things of focus for you and things that went really well throughout Q1?
Well, Q1, if we look at what we've done in Q1, we're positioning ourselves right now to be the industry leader in that mid-size vehicle range. We have what we'd consider to be a fairly healthy balance sheet. We have a very low when we look at our float out there, we have just over 30 million shares outstanding. So I think we're positioned extremely well for the growth that we want. And it's our backlog that we announced in Q1. We have over $90 million US backlog right now to deliver. And that's quite an amazing backlog to get out.
No, absolutely. And taking that a step further too, looking at the rest of 2022, if you look at the revenue projections and where you guys are at right now, taking everything into consideration, again, the supply chain crunch definitely affecting this too on multiple levels. But if you look at the rest of the year, any insider guidance you can give us to revenue for the rest of 2022?
Well, we'll be delivering on that backlog that we have. We've come out with some guidance. We feel we'll do between 70 and 90 million US dollars in sales this year, with an EBITDA positive balance sheet. So we'll be cash flow positive, and we'll be profitable this year. I think we have stated we'll be somewhere between a $3 and $5 million EBITDA for the year. And again, I think when you compare us with a lot of the comps out there, we're delivering the product, and we're actually getting into a profitable position.
Perfect. Okay, so from a retail investor's perspective, obviously a good place. We try to end all of these interviews as we're speaking to a retail investor audience. What would you say to an average or individual investor about the upcoming events for the company this year? Again, a lot going on in the supply chain market, everything else with the company. You guys have announced partnerships left and right. You've obviously got a lot of positive developments. But what other things would you highlight for a retail investor to keep their eye on the rest of this year?
Well, I'd keep an eye on our news releases. We've got a substantial backlog that we're delivering on. So, of course, the news releases of product being delivered, but also new orders that are coming in. Just stay focused on our news releases. And I think we're delivering product, and we're really developing that long-term value-added stock.
Outstanding. Okay, William Trainer, wonderful having you on in the first All Access. We got a lot of great information here, ran through the deck, and got some fantastic backstory to what you guys are working on. So, Vicinity Motor Corp, William Trainer, CEO, thank you so much for joining us.
Thanks for having me.
Wonderful. All right, I think we have our next guest backstage. We're going to keep things rolling and bring on Paul Gurney, the CEO of CBD of Denver. Paul.
Hi, Michael.
Welcome.
How are you?
Doing great. Thanks for joining us, Paul. How's everything going?
Thanks for having me. It's Friday afternoon in London. Sunny. For once, it's nice. How are you doing?
In London. There you go. Awesome. Awesome. Yeah, we are wrapping up the morning here. We're getting close to Friday afternoon, so I think everybody's in a good mood. Paul, we had the pleasure of having you at our Cannabis Capital conference in Miami not too long ago. We actually got to chat right after your presentation, so it's great to have you back here. For anybody who wasn't at the event, didn't tune in, give us a profile of CBDD. What do you guys do? What's the company all about?
Yeah, just to take it from the top. I mean, I've been the CEO of this company for 3.5 months now. We're obviously OTC listed company, and I came in from a banking career. I'd been working for a large Canadian bank, North American bank, for 15 years. I've been banking the cannabis sector for 4 years. And after speaking to a number of companies in Europe, I came across this opportunity called CBD of Denver with a 100% owned subsidiary in Switzerland called Rockflower that was doing, $10-14 million of revenue in a sector that didn't have a lot of revenue. Was really, really excited, made some trips out to see management, et cetera, and joined the company on March 1st. And the idea of our company and what we're doing is really to reinvent it. So primarily right now, we're a trader. We're a CBD flower trader, commodity trader. It's very low margins, high volume. And it's great. It's been great to get into the cannabis sector in Europe because it's the next leg of growth in the world. But the idea of me coming in is, how do we diversify this thing? How do we add another leg to the stool, 2-3 diversified businesses to make this a real company and not just a trader. So, in the first month, 2 months, got to know the people, got to know the business. We've done a complete restructuring in the business we announced with Q1, which is behind us. We did some cost-effective moves to get the company back on the right track. And now I really feel like it's a great, investment vehicle for people who are looking for an exposure to cannabis in Europe. And, if you look at actually the macro picture of cannabis and how it's gone, the US is about a $25 billion market right now. Europe's only $1 billion market. And we're really at the beginning of a trend into adult use in Europe. There's been a wave of medical legalization over the last 4 to 5 years. And Spain this week just announced that they're close to doing it there. But in terms of having a cannabis play, a consumer play in Europe, I think we're the best opportunity out there for people.
Awesome. Okay, Paul, I want to dig back really quickly to the beginning of what you said there too, your background in banking. Is there anything from, your previous occupation there that's translated over to give you any advantages in what you're doing now?
Yeah, so previously I was at the Bank of Montreal BMO, and in 2018, we were the main bank for the entire Canadian licensed producers, the LPs, the Canopy Growth, the Auroras, the Tilray IPO. We raised over $10 billion for the sector, and I did a lot of that capital raising over in London and over here in Europe. And what I saw from that, Michael, quite frankly, was just a lot of capital that got raised and misspent and wasted, and a lot of acquisitions that got made, a lot of costs that got added, and a lot of capacity that got built in Canada that now has been shut down. So, I position myself as the leader of this company, saying, I've seen the cannabis sector, I've seen what doesn't work. I think I have a pretty good idea of what's going to work, and you can do that just by looking in the U.S. market what works and what doesn't work. I'm not a genius, okay? You can see from history what works. So from a banking perspective, what do I bring? Capital discipline. I understand share price, how it works, structure, how to structure a company, how to speak to investors, how to get a process in place to be a company that has, pretty standard reporting cycles. So that part of it to me was an advantage. And coming into a cannabis sector that I've been quite familiar with the last 3 or 4 years and seen the places not to go, I think it gives us a huge advantage in Europe as the sector continues to grow.
Awesome. Okay, all good background. Let's talk about some recent developments then and some of the news you guys have had. We're going to get some insight into the Australian hemp wellness brand that you actually just got the subsidiary Mellow signed with. What can you talk about in terms of this partnership with impact to the business? Is there anything significant that's going to lead to revenue growth here?
Yeah, so listen, it's going to be revenue growth. So just to give people the idea of what Mellow is, it was the first acquisition we made out of the gate in the first month I was in the company. I took a look at the business and quickly came to the realization that our marketing function was pretty much non-existent. And for any sales, customer-facing business, you need a marketing function, and a digital marketing function this day and age is critical. So the Mellow team, it's been a great acquisition for us. Neil and James, I've known them in London for 3 years, so we came to an agreement and we bought them. And the beauty of what they do is they have this access into the whole CBD ecosystem, cannabis ecosystem, and customers around the globe, and touch points that we wouldn't have. So that that press release that we announced with the Aussie brand, I mean, they're looking for distribution. They're looking for a partner to bring them into Europe. They're not here yet. So how do they do that? And that's why they signed a contract with us, and we help them do that and do all the digital marketing. So is it a substantial contract? No, it's not like 10% of revenues. It's a decent amount of revenue for us. And it's one of those things that if we do well, it'll grow with us, and we'll be their partner for Europe. And they're a company that is well capitalized. They're down in Australia. They're planning on listing on the Australia exchange this year. And those are the kind of partners we can find and source with the Mellow team. And that's what I like about them.
Fantastic. Okay, in terms of other partnerships too, it's not just Mellow, but also the licensing agreement with the UK luxury CBD brand. What about details there? Why is this important for the business, and how did this come about too? What's the background there?
Yeah, so Oto, you wouldn't know it in the US. I mean, it is somewhat in the US. Oto, it's a luxury CBD brand. It's been one of a handful of success stories here in the United Kingdom in terms of CBD brand. They've really captured the high-end branding side here in Japan and globally. So the Mellow guys have had a really strong relationship with them for a number of years. And again, Otto is doing really well. That's who we like to be partnered with, the brands who we can help continue to be successful. And so here's a brand that wants global reach. They're expanding into the US. They've already been successful in the UK. They're looking at expansion into Europe. That's right up our fairway. It's perfect for us. So those are the brands that we want. Those are the customers we want. We want to partner with CBD brands, other health and wellness brands who are looking for a company that cares about their success. And that's us, I think.
Absolutely. And you talked about the customers that you have too. When you're thinking about customer acquisition and the growth strategy for bringing in new revenue, is it sales? Is it more of these partnership style acquisitions and brands and licensing agreements? Or is it just you going out direct to consumer? How are you bringing in new revenue?
So it's an excellent question, because we've, in the last few months, I've tried to really transition the way everyone thinks from a revenue model to a, how can we make money out of a relationship? How can we create a win-win? And how do we generate profit? Because at the end of the day, this is a sector that's lacking a company that's profitable. And if we want to continue to be a going concern and not have to be one of these companies that continues to tap the market for equity, we have to find business relationships that make sense for us. So the top kind of frame or scan that I tell people to use is, when you're entering a relationship or discussion with somebody, you need to think about how we can make money out of it and how they can make money out of it. So in terms of our funnel, we've eliminated a lot of the discussions with people where, quite frankly, it was very, very low margin business, like 2 or 3% business. And the math doesn't work on that. If you have somebody who doesn't pay a bill, then that's a loss. If you miscalculate something, or someone doesn't pay you, it's a loss. So that doesn't make any sense to do 2-3% business. And also it creates a lot of internal work, processing invoices and paying things and that. So when I look at the future, going forward, what are we going to be? Mello, we're targeting clients who are successful, who want to be more successful, who are happy to share some of that margin with us, and we'll share with them in their success. And then in the core business, in our commodity trading business, again, it's the same setup. We're trying to look for partners where we can have a double-digit margin and a relationship where both parties win, not a heads I win, tails you lose kind of situation. So that's me. I'm only 3.5 months into setting the strategy for the company, but that culture I'm trying to establish is one that's different than the cannabis sector out there. Because when I talk to people from other cannabis companies, they come from a background of, Canopy was able to raise $5 billion. So there was never any cost controls in the company. There was never any discussion about what people made or spending money wisely. There was never, trying to think at the end of the month, what do we really have to spend money on in zero-based budgeting? There was none of that. They spent like crazy. So our culture is not going to be that way. We're going to think about every dollar we invest, every penny that we spend. We're going to think about it. And I'm not against spending, because, you can't cut your way to greatness, is what a CEO once told me. So, to answer your question, it'll become much more clear in the quarters ahead as we start reporting, as we have 4 or 5 different business lines, what our priorities are. But I want a mix of margin, and I want 20 to 25% EBITDA margins. That's the goal.
Awesome. Okay, perfect. I want to dive into your Q1 earnings report and talk about a couple of things in here, because you had some really interesting points brought out. You talked a lot about the acquisitions, the branding and the move into Germany and some of the sales there. One of the quotes from you was about, on the surface, the numbers not telling the full story. They need to be viewed in context. The acquisition of Mello and the further expansion into medical cannabis sales in Germany, we're well on our way toward achieving that goal. Talk a little bit about that expansion into Germany. What are some issues or some roadblocks you guys have faced, and what is the progress looking like there right now?
So again, it's about repositioning this company into areas, I think, where their economics make sense. Germany for sure is one of the areas we would like to be. So we're still getting started there. There's not really any revenue or anything to speak of there yet, but it's attractive, Germany, because they have a medical market that's 300 million euros. They have a government and a parliament that's positive about legalizing on the adult use side, and they're going to start regulation. So we want to get into Germany. We're still exploring the best ways and best regions to do that. But again, that's one of the pillars that we're looking at. And it's, how do we do Germany? Do we just have a sales force there? Do we partner up with a distributor? And we're talking to a lot of distributors in Germany. Do we partner up with a producer who has product that needs to be distributed in Germany? So I look at our core competency as we're a sales organization, we're a distributor, and those are the discussions we're having with various producers, being like, you're a distributor, can you help us in Germany? And we're just trying to figure out what the right contract and right margin structure is for that to work. And for us being in Switzerland, geographically, Switzerland's right, below Germany, it's right there. And Germany is a massive rec market. It will be. It's 90 million people. So you need to be in there. You need to have a horse in the game. And that's why I tell my people, it's try and find us a unique angle in there that doesn't require us to put a lot of capital in. So we can kind of test, iterate, see if it works. And if it works, we'll spend more capital. And if it doesn't, we'll pull back.
Awesome. It makes a lot of sense. And another point I want to dive into here and get your take on. The report also talked about the business being negatively impacted in the first quarter by the reintroduction of the COVID controls across Europe and the pricing pressure on the CBD flower. So obviously, as we sit here now coming towards the end of Q2, the US actually just announcing this morning that we're going to take off the COVID controls for international travel. Where do you see the market heading after this? Do you think we're out of the woods with the COVID controls? Do you see that coming back and impacting the business? Where do you think the future lies?
I feel like we don't even really talk about COVID anymore. So, having to put that in the Q1 release, it was legitimate because Germany in particular did have like another lockdown over the winter. So a lot of the kind of areas that we sell into were impacted. That's all been lifted now. Europe's wide open, UK's wide open. There's no mask mandates. There's no vaccine mandates. It's as it was beforehand. So, in terms of COVID being an impact, it's not there. What happens next winter? I don't know. Your guess is as good as mine, but for now, it's business as usual.
Awesome. And another thing here, too, the European cannabis market update you guys gave. You talked about how the European market is at an inflection point. Cannabis reform, a question of how, not if. What do you see that progressing like? Do you see any roadblocks for that potentially? And where do you see the future of that over the next quarter?
It's like the analogy I give is like, imagine if everyone was like sitting in a circle and that circle was, the large European countries, and they're all wanting to do something, but they're waiting for someone else to stand up first. And once someone stands up, they'll all stand up. So if you look at it like this week in Portugal, the left-wing bloc reintroduced some legislation on adult use recreational use in Portugal. So the governments around Europe, whether it's the UK, Switzerland, Germany, they're all moving slowly but surely towards opening the door to rec. There's no rec market right now in Europe. Switzerland has started some pilots, really small rec pilot programs, but they're for research and development purposes, so it's not a widespread thing. But what I talk about Europe is it hasn't even started yet, and if it's Portugal who finally decides to get this through, then the other EU countries will take a look at it and say, okay, we should probably do this too. Do I know when that is? No. Could that be 3 years from now? Yes. 5 years? Could it be a year? Yes. But it's happening. And you feel it here. When you talk to people, you feel the attitudes towards it changing. When you mention the word cannabis to the person on the street, they're kind of familiar now with what it is and what the value prop is there in terms of legalizing. So I said when I joined the company, why I was excited and really excited about it is, within a year, all these countries could flip, and then there's going to be a race. Governments move slowly, so I doubt that happens in a year, but it's coming, and I want to be positioned for it. And there's massive option value. And so us in Switzerland, we have a team I put together to start working on these pilot projects to get a license. We're going to have that angle on Germany, and then we'll watch the rest of Europe as it unfolds. But there's a lot of green space there.
Absolutely. Got it. And the last thing I want to touch on from the Q1 report too was the restructuring you completed in March to reduce costs, putting yourself in a stronger position for the next phase of growth. Talk just a little bit about how that's unfolded. How has the restructuring impacted the business? And the last couple of months, how has that played out?
Yeah. So you get into, when you get into a new job and you take a look at it, you have to bring a different perspective to a business or to a team. I mean, that's why you've been hired. I tried to stress that when I first got hired and shareholders reached out. I'm like, well, just remember, I'm a new CEO. Like, I need to get my feet under me and understand what we have and understand maybe where we shouldn't spend money on things. So, restructures are always a bit painful, but they're completely necessary. And my view is, you look at the data in the US today, you have inflation at 40-year highs. Like, it's a pretty choppy market out there. And I'm an optimist, and I hope it, improves in the next 6 months, but I don't know. So I would rather build a very, very resilient business that doesn't consume a ton of capital so that we can make it through the rough spots in the economy, because I have no control over the broader economy. And the restructuring was all about that. We reduced costs by 40%. We're still looking at things now, potentially reduce costs a bit more, but we've got ourselves in a place where we're cash flow break even. And, with these new contracts and things that we're working on, we can start actually generating some positive free cash flow and doing some more interesting things. So I made that point in the press release about the restructure, because, people have to know that we've been doing something. And the reason we haven't been able to be out in front with press releases and talking to the market is I wanted 2 or 3 months to figure out what the business was and the direction I wanted to take it. And now I'm really confident we've got a really solid direction over the next 6 to 12 months. We've got next week, everyone's flying into Zurich. The Mello team's coming over. We've got 2 big strategy days to set all the targets for the next 6 months and really just start driving the business forward and move this thing.
Outstanding. That's awesome. 6 to 12 month plan, sounding solid there. You've obviously got a lot of things in the works. Let's, as a final point, take a look at a little bit longer down the road. The 5-year plan, the 10-year plan. Where do you see the future of the industry going? But CBDD along with that, where do you see you guys heading next?
So 5 to 10 years, you're going to have like a adult use market in Europe that's going to be anywhere between 25 to 50 billion. Okay, that I can say with a high degree of confidence. So that is the long-term plan that we're working on in the background that you don't see, is doing these pilot programs in Switzerland, is working on the adult use side. That's one part of our business. The other side with Mello and how I'm repositioning that side is health and wellness, a huge health and wellness trend globally, over $1 trillion spent on health and wellness. CBD for me is part of a broader health and wellness regime. It should fit in there. And really, if you're a company in CBD, you should be in the adjacent categories and you should have a total value prop for a consumer. So, 3 to 5 years, these might not be businesses under the same roof. You might have an adult use kind of rec business, and then you'll have a health and wellness business. But in 5 to 10 years, really bulled up on Europe. We will get through this regulatory side of it. We'll have adult use guaranteed. And who knows how that's going to grow and how that's going to develop and whether it's going to be a licensed system or what. I don't know that or how to monetize it, but I'm very positive for the macro of Europe and where we sit. And that's why I like being at CBD at Denver.
Fantastic. Paul, we love to hear that. It's Friday afternoon there in London. Enjoy the rest of your day. Have a wonderful weekend. Thank you so much for joining us on All Access.
Thank you. Thank you, Michael.
All right, Paul Gurney, CEO of CBD of Denver. We have reached the end of the All Access show for this Friday. With that, we want to say a huge thank you, of course, to all of our participants, our sponsors, and everybody else who helps out to make All Access come to life. Aaron Thomas is going to play us through with a ticker commercial as we close out. Stock perks and rewards for owning your favorite companies, shares in Starbucks, in Nike, etc. You can get involved with Ticker at the link in our description and, of course, on ticker.com.
What is ticker? That's right. Ticker with two eyes, just like you. Because it's for you. For invest for stock perks. For connecting to public companies who reward you as a shareholder, as a brand. That's why people stop tickering. Ticker. Where investors discover shareholder perks and consumers become investors in brands they love. Ticker. Start tickering today.
Awesome. And with that, we're going to say goodbye and see you next week on All Access next Friday. Thank you once again to all of the sponsors and all of the participants. And if you have feedback for All Access, feel free to send it to shows@benzinga.com. Any improvements or anything else you'd like us to add.